Knowledge is power. Make an impact by learning more, or hire us to do it for you. Let us focus on what we do best so you can stay focused on what you do best. Find all of our options under services, one-to-one training, subscription-based training, or accounting and business consulting. E-commerce, selling products. You have your profit margin, your gross profit, which is total sales minus your cost of goods sold. You have the gross profit percentage, which is that gross profit dollar amount divided by your gross revenues. You have your markup percentage. I want to explain all this to you. I want you to understand what this all means, especially if you're an e-commerce business owner. These are important things to understand and get into. If you haven't already done this kind of planning in your business, now is the time, whether you're brand new or you've been in business for 10 years. In fact, I'd say most of the e-commerce companies that I've talked to, especially in the beginning before they started working with me, have admitted to me in some way, shape, or form that they really don't truly know how profitable they are. And that's important, and I know that this is a pain point that a lot of you e-commerce owners out there are trying to solve. So give us a call. There's my shameless plug. Give us a call. We can help you get those numbers together to get you those calculations so you have clarity on it. In the meantime, let's talk about doing some planning, right? Let's say that you know, and I'm going to use this simple illustration just to keep it simple for the purposes of illustration. I realize, in other words, this can get infinitely more complex. But let's say you know that on average you can sell 1,000 units a month with an average cost per unit of $3,000 or $3,000 cost of goods sold on that. Your overhead is $10,000 a month, and that gives you a break even of $13,000, which of course is your cost of goods sold plus your overhead. And let's say we're selling those units on average at $20, generating $20,000 a month in sales volume, giving us a monthly profit of $7,000. Is that going to be enough for you to pull whatever salaries or anything you need to out of the business to cover your personal finances, to support your family? That's the first question you should be asking yourself, which is why you should do this very broad stroke kind of analysis really quickly. And let's say it's not, then there's a few things you can do. There's really two things you could do. You can either sell more stuff or lower your costs somehow, right? You can try and negotiate better pricing to lower your cost of goods sold, or you can figure out where you can cut back on overhead. I looked at this kind of scenario a while back. I was actually working with a client, and he needed help with being able to sort of do negotiations quick on the fly. He was a promotional products guy, so he sold, people would come in and they'd say, I want 1,000 pens, right, or whatever it was. So he needed a way to do these negotiations quickly. And he knew, because he had done some of the math, he knew that he had certain minimum margins that he had to meet in order to make sure he stayed profitable enough, right? Because remember, that's the key. It's one thing to say, great, I made a profit. It's quite another to say, is that profit sufficient to support my family or whatever else I may need to support? Plus, heaven forbid, have some money left over that you can retain in the company to fund the growth of the company, right? So lots of reasons why it's not enough just to make a profit. You have to make a significant enough profit to be able to grow the business and support your family. So I poked around on the web and I found some margin calculators, and a lot of them were really cool, but none quite as dynamic as what I then went to create, because I needed something for my client that was much more dynamic, especially when it came to negotiations and trying to understand how low can we go. So I put the numbers in here to my template. I'm putting in, again, a quantity of 1,000 cost per unit. This includes the overhead at $13 per unit. So keep in mind, these are not really gross profit numbers. They're actually net profit numbers. But for this purpose, that works. That's what we need to understand and analyze. So I put in the cost per unit, and I have my selling price of 20. So far, the math is pretty straightforward. You didn't need me to create a whole spreadsheet just for you to figure this out. But now let's say somebody comes into us. Let's say now my client is negotiating a big purchase, and the client comes in and says, it's $20,000. I really budgeted something much less than that. I wanted to pay only $15,500. So the first thing I want to do just quickly, and of course this is, again, I didn't create the spreadsheet for this part, but I can go into scenario 5, enter their total budget, their total selling, which would be my total selling price of $15,500, and then come back to them and say, well, in that case, I can just ship you 775 units. Now, they may come back at that point and they might say, okay, fine, that's what it is. Or they might say, we really need the 1,000. We're just hoping you can work with us. And at this point, you have a choice to make. Either say, no, I can't do it. This is it. Or you want to negotiate with them, and there could be any number of reasons for that. Probably the most obvious one would be, you're going to get repeat business from them, and so you want to make it, work. So at that point, then, what we want to do is we want to go over here to scenario 3, because scenario 3 lets me play with the gross profit. So I could say, well, how much of a change in gross profit, how much of a reduction of gross profit can or am I willing to withstand? So I can just play. Let's knock it down by 2,000. Let's go to 5,000. So I just enter 5,000 in there, and then it tells me, okay, I'm still selling him the 1,000, so I can't give him the 15.5, but I can offer it to him for 18,000. But then I look here and I say, but this drops my gross profit margin to 27.78%. And I might look at that and say to myself, you know what? No, I can't go this low. I really need this gross profit margin, which again, keep in mind is really the net profit margin. Bottom line, this number needs to be 30% at a minimum. So I'm going to go to scenario 4. Now these markers, by the way, indicate which things you can change. So this means that in scenario 4, where it lines up with the gross profit can be changed. So I go in here, and what you have to consider also is what things can't be changed, because that's what tells you how it's going to sort of adjust, right? So it's going to keep, whatever I can change in this scenario means that's going to remain constant when I change anything else. So let's change this to 30%, because that's kind of the lowest I want to go. That brings my gross profit to $55.71. Total selling price, $18,571.43. Now I can go to the prospect and say, look, this is the best I can do. This is my final offer. I can't give you the $15,500, but I can give you the $1,000 for $18,571. That's the very definition of negotiation. But having a tool like this in front of you lets you do it intelligently and in a way that makes sure you're covered, that makes sure you're not giving too much away, that makes sure you don't end up having the deal cost you money, because you've done the research, you've done the math, you know that you just need to keep your margins at a bare minimum of 30%. And you should know that. You should know what your normal retail price is and how much wiggle room you have in there in case you want to negotiate with somebody in order to get their business. That, my friends, is what my margin calculator is all about. Read the write-up. If you're watching this on YouTube, check the description. I always put a link right over to the complete write-up. There's lots of information in the write-up I didn't cover here that help you understand the definitions and explanations for how to calculate a lot of these important numbers that you're seeing here, like the gross profit, the margin percentage, and the markup percentage, and you'll understand the difference between the two by the time you're finished reading my write-up. As always, I hope you had some fun here, learned something along the way. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.